would it change the way we think about the poor if I were to tell you that it's not so much about how little money they have, but whether they have the tools to manage it? I came to Women's World Banking, a global microfinance organization, in September 2006 with the aspiration to bring financial services to the poor. 1 month later, Muhammad Yunus was awarded the Nobel Peace Prize for his pioneering work in the field of microfinance. At the time, microfinance was generally accepted to be the provision of small loans to poor entrepreneurs to start or grow their businesses. You may have heard of the example of say, the $50 loan that enabled a single mother to buy a sewing machine to start a tailoring business in her home and put her children through school. Microfinance was seen as a smart solution to lifting people out of poverty, and it was the darling of the international development community. Shortly after I joined Women's World Banking, I started traveling to meet some of the 19 million clients served by our partners around the world. I met Nandini on a visit to Ahmedabad, India, and I was fascinated by the business that she had built literally out of the trash. Now, you or I, seeing the dirt road outside her one-room home, probably would have just seen garbage. But Nandini, like any good entrepreneur, saw opportunity. She would collect used bottle caps, and then with a $100 loan from a microfinance institution, would flatten the bottle caps with this bottle cap flattening machine that she had bought with the loan. And she would sell the flattened caps back to soda distributors like Coca-Cola in her city. I was so impressed with this story that she became kind of a poster child for me. To me, she was an inspiring example of what was possible if you gave someone a small loan to grow a business. In the years since I met Nandini, however, I have been humbled by just how wrong I was about what she really needed to juggle the financial pressures she faced. I was wrong because I was looking at her in a limited, one-dimensional way, as if all of her financial needs could be met by a $100 loan. This narrow perspective on the lives of Nandini and women like her completely ignored the complexity and vulnerability that they faced. And Nandini was vulnerable. Just shortly after I met her, her husband became ill and could no longer work. The money that she earned from the bottle cap business wasn't enough to cover his medical bills, so they were forced to take their eldest daughter out of school to begin working to supplement the family's income. Ultimately, she wasn't even able to repay the balance on her microfinance loan. And the family slipped deeper into poverty. And in the midst of all these other calamities, the cash that she had painstakingly saved under her mattress was stolen. I was so very sorry to learn what had happened to this proud, vibrant woman. She had had a great entrepreneurial idea. She had even proven its commercial viability, but she had no safety net in place. She had managed to raise the capital for her business, but that was not enough. So imagine with me for a moment how you would live your life if you had to conduct it entirely in cash. How would you pay for food, clothing, shelter? How would you even begin to think about longer-term needs like your children's education or the down payment on a house or your retirement? I don't know about you, but I was thrilled when New York taxi cabs installed credit card machines. I can't tell you how many times I got into a taxi without enough cash on hand to cover the ride. So imagine again how different Nandini's life would have been if she had a secure place for her savings, if she'd had insurance to cover her husband's medical costs. Like all of us, she had complex needs that required multiple financial products to manage. when we think of Nandini as a consumer and not as a charity case, a global market opportunity opens before us. The financial service providers that recognize this opportunity will reap the benefits. 3 billion people, 40% of the world's populations, have no access to formal financial services. We typically refer to them as the unbanked. Over half of them are women like Nandini. And there is absolutely nothing micro about a market that size. So let me tell you about a bank that recognized that opportunity. Diamond Bank is a very successful, large, but primarily corporate bank in Nigeria. Guess where they see their biggest future growth market? In the 56 million unbanked Nigerians. So we worked with Diamond Bank to develop a savings product for these people. The men and women who sell dried fish, goat heads, I thought I'd spare you the picture of the goat heads, vegetables in open air markets all over the country. Now this is the part that Bob was referring to. The building in the background is the Diamond Bank branch. These people were literally living and working on the bank's doorstep. On any given day, there was probably more economic activity, more money changing hands in that market than there ever was in the bank. But these men and women were completely invisible to the bank as potential customers. So we worked with Diamond Bank to develop a 6-month pilot for this savings product. In the first month, we opened about maybe 800 accounts. By the second month, we had gotten up to 6,300 accounts. And then things really took off. We were opening about 2,000 accounts per week. By the end of month 4, we had opened 38,000 new accounts, more than double our pilot target of 16,000. Diamond Bank's management is thrilled with the results and is excited about leading the rollout to this product nationwide and even now beginning to develop additional new products to serve this client market. But what does this really all mean? First, by opening this product category to their new customers, Diamond Bank opened a world of financial opportunity for some of the hardest working women and men that I've ever met. Some of them needed financial education alongside their bank account opening, including the woman who, after seeing her first month-end statement, asked, "Why am I being paid interest on my savings instead of having to pay you a storage fee for keeping my money safe?" But more importantly, 38,000 people who previously had no other possibility of saving in anything other than under the mattress now had the safety and security of a bank account that Nandini never had. We need more commercial banks, more insurance companies, more mobile payment providers to equip the poor with a broad array of reliable, affordable financial products. They need savings accounts, yes, but they also need insurance policies, leases, pensions, all of the same products that you and I, frankly, take for granted. So what is possible if you provide the poor with the right tools to manage their money, regardless of how little money they might have? So here's one answer to that question. A few years ago, a UN research team completed an 11-year study of 600 households in Bangladesh. In the households where the women only had access to a loan, there was really no shift in civic engagement or political empowerment. But there was a dramatically different outcome in those households where the women had access to a combination of loans, savings accounts in their own name, and financial education. There, you saw the women and their daughters voting regularly in local and national elections, and even standing for election themselves to the village council. When we provide the right tools for the poor to manage their money, we are providing so much more than financial security. We are freeing them to dream and plan and hope for a better future for themselves, their families, and their communities. Multiply that by 3 billion, and the world starts to look like a very different place.